Hi, good evening, everybody who is in class at the moment. If you're in class, I'd like you to type one in the comment section. If you're in class, please type one in the comment section. Just type one for me. I want to know if you're in class. Okay. Good evening. Good evening. Good evening, everybody. All right. So I'd like us to just tonight's class is going to be a little bit brief. Because like I was saying, like I said in the other class, like the class before, I mean in the last class, that I don't know what happened to my slide. It just backdated. I lost a lot of slides. I lost more than 80 pages slide gone. So I have to start preparing them all over again, at least to arrange the thought. It's not that you can teach this thing from inside, but I always love to have arranged thought and scheduled teaching so that I can systematically program you, because my goal is to program your subconsciousness, program your mind to become effective, because to become profitable. That's why you see me saying something and again is intentional. Is intentional because when I was starting out, I discovered that there are certain things I learned, but until I was able to push them to my long-term memory, I was always making mistake trading. I learned something. For example, trend is your friend. You discover that before you know it, you already counter trend. You're already trading against the trend, just because because the moment you get to the market, sometimes you could have forgotten everything you have learned. If you are, especially the new beginners, just because you are seeing a green candle does not mean you start buying. And that's done. And just because you are seeing a red candle doesn't mean you start selling. So many people don't really understand that. So I'm intentionally programming you. I'm taking it systematically, doing it one after the other. And just like you gain admission into university and they don't teach you, you don't become an engineer in one day. And just like I told the physical class, the first statement I told them in class was that trading is a career. It's a career. And you don't learn everything about a career in a day. You don't pour everything on you at once. It's systematic until it programs you, program your subconsciousness. And that's the reason why I'm a very good teacher. I know. So I plan my teaching. Okay. Now, up until the last class, I've been teaching you all manner of things, trying to lay a very strong foundation. But then the best traders are the best and the professional traders are naked traders. Naked traders. And by naked trader, I mean they are price action traders. Price action trader. Couple of years ago, see, my mind started tending towards this price action trading, because the person who actually taught me trading did never taught me anything about price action. He never taught me about using price to enter market. It's just all about one strategy, another strategy, one strategy, another strategy. I mean, if you have watched a couple of YouTube videos online, you will see different kind of strategies. Strategies work, but you see, when you use any of those, many of those strategies, is either they are lagging or they are leading. This indicator, I know I've taught you moving averages. When the red line cross the blue line from down up, buy. When the red line cross the blue line from up down, sell. When the red at the blue line cross the black line from down up, buy. When the red at the blue line cross the black line from up down, sell. Fine, beautiful. And I told you that's not how I trade. But then the strategy is sufficient to make you a multi-millionaire from the market if you work it out. It's one thing for me to teach, it's another thing for you to learn. You've got to learn. You've got to learn, you've got to be serious. And I'm sorry to say, some of you, your destiny depends on this thing that we're talking about record, about student, about student that is what they use to feed now. Yeah. Some of your destiny depends on this. We live in a country where to get a job is difficult. To get fund to fulfill to fund your vision, to get money to fund your vision is difficult. One of my interests is be that you make money in trading financial market and use that money to fund your vision. If someone want to do agriculture, you want to do poultry, you want to do fishery, and you trade, make money, and put that money into fishery, put that money into agriculture, and that will give me joy, I'm telling you. Okay? You want to learn a skill, or you want to go to school and pay your school fees. I'm trying to teach that. I teach you very simple strategy. Those crossing moving averages, if you work them out, is enough for you to pay your school fees just with little capital starting. Okay, a couple of years back, I think the year 2019, 2020, I told one of my students, I said, when you are in class, if you are in school and you see students who find difficult to pay their school fees themselves, bring them to my office. I'll teach them very simple strategy. If they can work it out, they will never need to get school fees from home again. And I did that with a couple of students. They even make more than their school, more than making school fees. So work it out. So price action trading is important. That is where we are beginning the professional level, the professional trading, the price action. Why? Because indicators, there are two, all the indicators can be divided into two. We have the lagging indicator, we have the leading indicator. But price action gives you early entry and early exit. You know the direction almost at the beginning if you're a price action trader. Many years ago, I came across a material, a book with the title No Shin Indicator. No indicator at all. That what the guy was teaching about price action. How you can use candlestick pattern, how you can use, other tools, very simple tools, Fibonacci's and the likes, and the trend lines and the like to enter trade in the market without necessarily using, a robot, without using, indicators, so to speak. But there's nothing wrong about indicators. Using indicator is not a sin. There are people today who have made multi-millionaire from the financial market, and it's indicator they use. So I'm just presenting to you because one of my goals at the end of the whole training, my goal is that you should trade the way I trade. And I also want you to understand that you don't have to learn many things from the market. Part of my target is that if all you know is what I'm teaching you in this training, we used to be successful, we used to be effective, and I know you will because I am. So just follow me. If at the end of the whole class, you know that what I've taught you is not enough, then you cannot dabble into anything else. But if you see, I pray I have time because I need to develop my slide again and then teach you systematically until we are done. Okay, so if that's all you focus on, will you be effective? Will you be productive? And I believe you will. Only if you work it out. It's one thing to teach, it's another thing to learn. My job is to teach, your job is to learn. Because sometimes it's possible I teach, but you don't learn. So you've got to learn. We've got to learn. So price action gives you early entries without lagging. Indicators can lag, indicators can lead. And then, so make sure that everything we are teaching, you are practicing them. Make sure you are practicing them. You're practicing them. You're practicing them. Because see, let me tell you something. Sometimes it can take you 6 months to back test. I remember one particular year, I had a strategy. I got a strategy somewhere. And in fact, that particular time, I bought a brand new laptop just because of that strategy. I said, okay, this laptop, I just went to where they sell the system. I just bought a laptop. I said, I'm dedicating the laptop to this strategy and one single account. So what happened? I needed to concentrate to backtest that strategy. So I traveled. I went to an hotel, lock up myself in the hotel for days because I wanted to backtest the strategy. It's important. Because the reason is this, until your strategy is in your subconsciousness, you cannot profit from it. Until you train yourself, that as soon as you open chat, if somebody gives you his phone, if somebody gives you his system and say, okay, analyze your strategy, you should not, in few seconds, you have to arrive at something. And as you go, if you don't practice, if you don't you backtest. Everything I'm teaching you now, all that you should be doing in the next couple of weeks to backtest. Then after backtesting, you now forward test. Forward test. Forward test is what sometimes you use demo, you not trade. Then you not a part of forward test is to fund an account with little money and see how it works. Then you now scale up. Okay, so be disciplined, practice, be disciplined to follow the strategy. Discipline. Discipline is what differentiates between profitable trader and just an ordinary trader. Profitable trader. To make money in this market consistently, you've got to be disciplined. You've got to be disciplined. Make up your mind. I'm going to make money in financial market. Make up your mind. You got to see this is one of the ways that if you get the strategies, if you control, if you build that discipline, this is one of the places where you will you can make income, you know, almost effortlessly. Okay. So this market is controlled by three things. I was teaching those in physical class yesterday. It's controlled by three things. Number one, greed. Greed. The market is designed to punish the greedy. Greed. You know, let me tell you something about financial market. The design of the market is based on the understanding of humans' emotion, human psychology about money. The market was designed that way. It shakes the legs of the greedy. Three things control the market. Number one, greed. Greed control this market. People have lost money because they are greedy. Like I was saying, the story of that he's not even a young man, he's an old man whose story went viral on social media a couple of days back. How he lost money, how he sold his house, how he sold his property and put the money to trade forex. And the person in interview was asking you, can you explain what is forex? He said he did not really understand. Something was wrong with his brain. Greed crashed in. It wasn't forex that crashed in. Greed crashed in. See, the system is designed. I knew many years ago. I knew this system is designed to punish the greed. That is why your risk management is important. Don't worry, towards the tail end of this course, I'll be teaching you risk management. I'll give you the parameters that you need to use, how you're going to discipline yourself, that how you need to think in long term, making money over a period of months, not just within 1 hour. The focus is in long term. Greed punish the guy. Number two, fear. Fear. Fear controls this market. The fearful. Oh, sometimes they made the profit of that in forex market, people close profit early and they leave the loss for a very long time. With just little one problem, $1, he has already closed it. The discipline to fall. For example, look at the crossing of moving average. Do you know that if you don't control your fear, that strategy will not pay you? Something has crossed, and I told you don't come out until there is a reversal cross of the blue line. If you can maintain that strategy, even when you lose money, the day the money will be given to you, you'll be amazed. Let me tell you something. In class, on Saturday class, I was with some students physically, and then I was teaching them that same strategy. and they all gathered around me using, with the computer. And so someone now asked, "So we are doing the past. Can we see the current sometime we can all do together?" So I scrolled to the beginning of that chart. It was crash 500 because on a Saturday, and that line was just crossing. I said, okay, I don't trade like this, but let me teach you. So I entered that trade. My goodness. I entered the trade. I opened the trade in another account and I left it there. So by the time I was about to go to bed at night, all the positions were in profit. I just locked it up. I just locked it. And I woke up in the morning, massive profit. Massive profit. And but when I was about to go to church, I closed it. I made massive profit because I left it. How many see at the beginning, and a beginner trader will not want to leave trade to go for long. I understand that. But if you can be disciplined, my exit is my exit, my entry is my entry. Fear controls this market. And number three, hope. Hope. Hope control this market. Fear, greed, and hope. If you can control these three things, if you discipline yourself to monitor, to manage fear and manage greed and manage your hope. Sometimes you're supposed to close a trade in negative. You're just hoping it will turn back. Come on. The analysis are saying this thing is a loss already. Close the trade. Look for another entry another day. Close it. Don't let hope finish it. Some people hope until I met one man some years in the past, and in a particular state in the country. I think it was in Kwara State. I was in Kwara State. I went to somewhere and I met this guy. He has opened. He has been in loss on an account for like 6 months. Why did you close this trade? He said he has been asking his coach whether he should close it or not, but his coach has not replied him. I was like, fear, greed, hope, fear, greed, hope, fear, greed, hope, fear, greed, hope. I like to type in comment section, I manage my fear well, I manage my greed well, I manage my hope well. Type in the comment section if you are hearing me. I manage my greed. Sometimes it's good to be greedy, but can you manage it well? Over greed is what is killing some people, or let's say greed itself. You see, follow your plan. One of the things you need to do at the end of this training is that you will develop. Maybe I'll ask you to send me. You will develop your own plan. I shared it in the other group mentorship with Dom. We are in CHICS in Trade now. In mentorship with Dom, I told them what to trade. I told them to determine. You focus on the instrument you want to trade. Then you write out what time of the day will you trade, what size of your account will you risk, how much will be your capital. You plan it. Because you see, there is no trade except you have there is no profitable trader without a plan. Okay. So come and say I manage my greed, I manage my fear, and I manage my hope. As a trader, I manage my greed, I manage my fear, I manage my hope. I don't let the greed manage me. I manage the greed. I don't let the fear, destroy me. I manage my fear and I manage my hope. Is somebody there? Can you type it for me in the comment section? All right, let me share my screen with you now. I manage my greed, I manage my fear, I manage my hope. I manage my greed, I manage my fear, I manage my hope. All right, let's continue. All right, beautiful. Listen, there are only 3 tradable markets. There are only 3 tradable markets. There are only 3 tradable markets: the uptrend, the downtrend, the ranging market. The uptrend, the downtrend, the ranging market. No other market, nothing else to give you an edge in the market is how to trade to reverse class. Then tomorrow, I want to teach you. I'll go deeper tomorrow. From tomorrow, we're going to go deeper. We're going to go deeper. Okay. So just let me introduce of those who have just joined the class. Managing how to trade, how to trade, this trading market. And I see a reversal is defined as a price turning point. Price turning point. One of the things you need to know is that to know one of the biggest key you need to know is to know when the price is reversing from its niche from the opposite direction to a previous trend, and when it is only retracement. See, the reason why people lose money is when they assume retracement is a reversal. That is the reason why people lose money in the market, or the main reason why people lose money in the market. When you assume retracement is a reversal. A retracement does not signify a change in the larger trend. Retracement is defined as a price pullback in a trend. Many times you see somebody trading against a trend, and sometimes professionally you can do it, but you know it's the counter. But as a beginner, don't even think of trading a counter trend. Focus on the trend. Let your entry be toward the direction of the overall trend. If you build that attitude of always following the trend, I'm telling you, you will always make money in the market. I guarantee you that 8 out of every 10 times you enter market, you will make profit. 8 out of every 10 times. If you're a man that follows trend always, 8 out of every 10 times you will make profit. It is that simple, but I want it to enter into your being, enter into your subconsciousness, enter into your mind, enter into you strongly. Okay? So look at this. When the market experiences two peaks and troughs successfully higher than each other, then the market is said to be in an uptrend. Two peaks, two troughs successfully higher than each other, the market is said to be in an uptrend. And they said the same thing, that when the market experiences two peaks, troughs successfully lower than each other, the market is said to be on a downtrend. Very simple, very, very simple. That means, how do I know that the trend has changed from downtrend to uptrend? All I need to do is to count. If I'm able to identify two peaks and two troughs successfully higher than each other, then the market is said to be that it is telling me that the trend has changed to an uptrend. And the reversal is the case. And of course, the opposite is true. Of course, the opposite is true as well for a downtrend. When the price shows two peaks and troughs successfully lower than each other, then the market is said to be in a downtrend. I'm telling you. And so, when I count P1, P2, now listen, now, let me blow your mind with this. Let me blow your mind with something I want to teach you this night. Just, I will teach you this and then we'll get out of the market. Let me blow your mind. Let me give you a strategy this night that it is the first strategy it is the first strategy I'm going to be teaching you right now as a price action trader. And of course, I have a couple of them. I have my quiver full of strategies. But you see, this is like the simplest and the most powerful. This thing can guarantee your financial freedom forever. Now let's go there. Let's go there. Let's go there. Let me show you my chart. Let me show you my chart now. This is life changing. This is life changing. All right. So let's go. Can you see my screen? If you can see my screen, please just type 2 in the comment section. If you can see my screen, just type 2 in the comment section. Type 2 in the comment section. If you can see my screen, please type 2 in the comment section. Just type 2 in the comment section if you can see my screen. Oh boy. Is someone there? All right. All right. Mohammed has typed 2. All right. So let's continue. Let's continue. From January 2025. January 2025. So let's begin from here. Now, imagine this is the only strategy that you know. What I want to show you tonight. Imagine this is the only strategy that you know. This guy is selling. He's selling. And when he's selling, this is the peak. This is the resistance. Then it came to form another resistance. And except the resistance is broken, I will not buy. Then it came below to form another resistance. Another resistance. Another resistance. Now, instead of going down, the resistance is broken by this. The moment I see obvious resistance broken, okay, resistance, 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 because as the price is making swing, the last place where the price turn to the direction of the main in the direction of the main trend becomes resistance. So this is a resistance. The moment I see this that this resistance is broken to the upside, so what do? I start to my P1, my P1, my P1. Then I want to do the 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 trough to trade T1. Then I have my P1. Sorry, I have my P2 peak. P means peak. I told you when the market made two successful peak and trough higher than each other, it is said to be in an uptrend. Now, let's see where the completion. This is my T2. Where is my T2? Imagine this is all that you know to use to trade. Imagine this is all that you know. T2. You can use it in any time frame. 1 hour, minute, and the likes. Now, the rule says that at the cross of the P2, here, the rule says you should buy. You should buy from here. The rule says you should buy from here. So what do? The moment you see that the structure is broken, it's no more following the structure, is following that. The structure is following that is that it must be following lower high and lower low, lower high and lower low. Lower high, lower low, lower high, lower low, lower high, lower low. But then it has formed a higher high. It has broken the structure. The way it broke that structure, the last high here becomes my P1, my P2. Then this is P2. Sorry, that's supposed to be P2. So he said at the breaking of it, that's what I was showing you on the PowerPoint. At the breaking of this, so what do? I will switch to, I'll be expecting it in the future to see where this P2 is broken to the upside. Now, because of this now, I'm expecting a buy. And I want to see if this thing complete. Sometimes it may not complete. If it does not complete, for example, if this 2 goes to close lower than T1, it means the sell continues. Don't think of buying again. It must complete P1, T1, P2, T2. So at this place now, the strategy says just with a lower time frame, the strategy says I should buy. And look at it. Look at it. At the close of this candle, you're going to buy. When you buy, where will be your stop loss? Your stop loss will be this last swing. Your stop loss will be here. Your stop loss will be here. And then you follow it, follow it, follow it. And then if I were you, I will follow you with swing. Listen, if this class is all that you know, you're a millionaire. Now watch, I will follow it. The moment, see, my stop loss is on this last swing, especially if I can put that swing on the time on the place where I checked, where I counted my P1, P2, and that's why I put it here. That's why I put it there. Is here. My stop loss is here. And so, but then I'll be using what that cross on H1 on a lower time frame. So if I look at this thing from H1, I'll be looking for an entry on M15. If I look at it from M15, I'll be looking to enter on M5. And so at the close of this candle, that's where I will enter. So my entry will be here. My entry will be here. My stop loss will be the last swing on H4. Some people will put their stop loss there, they will have lost this trade. And so I will now be following this. As the thing is moving and moving and moving, as price get to this place now, as price, I'll be moving my stop loss to the swing. It will be here. My stop loss will be here as price move on. My stop loss will be here as price move on. My stop loss will be here as start move on. My stop loss will be here as price move on. My stop loss will be here. This is where I'll be losing that trade now. This is where I'll be exiting the trade. And let's see how many pips you have gained with that. How many pips you have gained with that? How many pips? You'll have gained, you'll have profited, you'll have made about 125 pips. Sorry, 128 pips. 128 pips. I understand that the risk of this one is a little bit more, but then that's what market present to you. That's what the market give you. That's what the market is giving you. So you'll be risking 191 to get 128. It happens sometimes. It happens sometimes. It happens. It happens. And so now I get back to my main time frame. So when this thing closes like this, when it closes like this, and then this is so the rule now is that since that told the upside, this will be my low, and then you'll be telling yourself, I will never sell except the support is broken. It comes again. I will never sell except the support is broken. Then I will never sell except the support is broken. But now support has broken here. Support has broken here. Support has broken here. This support has broken here. I will immediately count my P1, my P2, my P1, my P2. Okay? And this I will count my P1. This is my P1. My P1. Then this is my T1. This is my T1. Then this will be my T2. This is my T2. Sorry, P2 rather. P2. And this will be this is supposed to be my T2. Now I'll be waiting for the price to come to this place. That means the price, because the moment it has broken this one now, that means the price is again on the on the bullish side. Okay, so it has broken this order again. Normally it's supposed to be going down, supposed to come down like this. It didn't come. That means and it has gone to break the previous resistance that's broken into the upside. So what do I do? I'm now looking for a sell now. Sorry, a buy rather. Now, but then I now have another P1. All this time now, after this thing has entered, I'm not trading anything because the structure is not clear to me again. It's not clear to me. It has put this support here, okay? But then I'm seeing a gap down. It has not settled down. This is sometimes I say people see, we cannot trade though. The shape, the chart has not formed yet. We don't know, we can't recognize this shape is giving us. Okay? And so I have my P1. Maybe this one has broke. Okay, this is supposed to be my P1. My P1, then this becomes my T1. Then I have my P2. This is supposed to be my P2 and T2. I don't know if anybody understands this. The moment that structure break, this becomes my P1, my T1, my P2, my T2. Then at the end of that T2 is where my entry will be. My entry, I should be looking forward to sell from here. I should be looking forward to sell from here. So if I sell from here, Where will be my stop loss? And I'm going to be switching to a lower time frame. Switch to a lower time frame. On the lower time frame, I'll be entering a buy here. I'll be entering a buy here. Okay, at this spot, I'll be entering a buy somewhere here. I hope this is not looking complex to you. Entering a buy here and enter a buy, then I'll be shifting this, my stop loss, my stop loss, my stop loss, my stop loss. I don't really have so much. This is January actually. All this time January, people have not fully decided for the year and the like. So I'll be coming out from here. So I'm only having how many pips profit? How many pips? I'm only having 21 pips profit. So I get back to my now. This one has broken again. This one has broken the support. So I'll be having my P1. I'll be having my P1 and I'll be having my T1. But it didn't complete it. I'll be looking for T1. Since it's broke there, I'll be looking for um P2 here and T2 to come lower. Now it didn't go lower. Since it didn't go lower, it's always telling me that since it did not complete that sell, it's telling me that the market is still going to the upside. This is what I'll begin to teach you maybe from tomorrow, how to now use trend line to continue. Definitely, if I'm the one trading this thing, I'll be entering a trade at this spot. Don't worry, I'm going to be teaching you that maybe the next class. I'll be entering a trade somewhere around here. I'll enter a trade somewhere around there based on my trend line breakout. Then I'll push my stop loss. I'll follow my stop loss. I'll follow my stop loss. I'll follow my stop loss. The market will close me out. Look at how many pips I've gained. I've gained 300 pips. I've gained 300 pips. Do we need to put our TP, sir? Do we need to put, sir? I don't understand P1 and T1. No, it's kind of complex. People say it's complex. It's not complex. It's not complex. If you watch the video I sent to the group yesterday, the video I sent you people to watch, those who are being in chicks and chicks in trade before now, you should not make this will not be difficult for you. Okay, I read something to you on the PowerPoint on the slide where the market make two successful peaks and trough successfully higher than each other is said to be in an uptrend. And when you see an uptrend, until the end of the uptrend, you should not sell. That's the only thing I'm trying to explain to you. And when the market make two successful peaks and trough lower than each other, then the market say you should sell. And if you're in a bearish market, a downtrend, you should never think of buying. So that's what I'm trying to explain to you. Okay? Some say kind of complex. It's the simplest thing in this world. It's the simplest thing in this world. So let's do another example. So now on this trade now, let's say this trade now, I've been buying. And when I'm buying, you need to understand that your obvious support must not be broken. It must not be broken. It must not be broken. This is support. The moment the support breaks, that means the sell is getting terminated. Then here again, the sell is getting terminated. Then here, until you see that the obvious support is broken, you maintain the buy. Now it was broken here. The moment you see the first breaking of the support, this is a support now. This is a support. This is a support. This is a support. The swing. Now I'll be watching it. This support must not be broken. As long as it's not broken, we are still buying. We are still buying. Now when it breaks, it must complete the P1, T1, P2, T2, peaks and troughs. Peaks. P means the peak. That means the top. The crest and the trough. And the trough. This is the peak. Peak means top. So I'll be counting this. This will be my 1. This will not be my P1. Okay. Okay, let's look at this now. Let's look at it from here. This guy has been selling. Now you can see. I'm trying to give you where the example is very clear. See, it's very simple. It's not complex. This is resistance. This is resistance. This is resistance. And yeah, it's forming market is forming lower high and lower lows. And all of a sudden, this resistance have been broken by this price. The resistance have been broken by this price. And when it breaks like this, that means it is no more following the rules of it's no more following the rules. It's supposed to be following the rules. It's no more following the rules of the structure. It must follow the rules of the structure by forming lower highs and lower lows. Lower highs and lower lows. As long as this high, as long as it is not higher than this one, as long as it is not higher than this one, you don't have a problem. As long as it's not higher than, as long as it's not, it must go lower than the previous low. As long as this place, as long as this resistance is not broken, we are still selling. From all means, we must always sell. As long as when this thing close, it can close at the same place, but it must not close higher than it. If it closes higher than it means, oh, guy, it's like direction of the market is about to change. Okay, so it must close at the exact point or close lower. So the market is forming a series of lower highs and lower lows, lower highs and lower lows. Now, all of a sudden, you see something like this. Market close above. Market close above this. It's not supposed to close above this. It's not supposed to close. So the moment it close, that means at that moment now, you should stop selling. Just stop selling. Don't sell again. Then you now watch if this is the first breakout, if the market now, the moment this happen, if the thing now close again and close lower than this last low, that means the sell still continues. But if it close here, so the moment this happen, you put your P1, your peak. It has formed the first peak. Your P1 is here. Then you have your T1 will now be here. The trough, trough. T means trough, the lower part. Then this is now your P2 now. That one that crosses over it is now your P2. It's now your P2, your peak 2. Okay? But for you to finally conclude that the market has changed to the upside, this must break it again. This must break it again. It must break it. It must break it. So the rules now says that from here, you can begin to start to buy from here. From this price now, you can begin to you can begin to start looking for opportunities to buy. Do you understand it now? Do I need to explain it again? Don't worry, see, I can explain as many times as 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 until all of you get it. Because every other thing I want to teach you, this is the foundation for it. If I begin to teach you anything else, and you don't get this one, you will still be missing every other thing I want. This is my most basic foundation of price action. Because every other thing we'll be doing now will be to build on this. Okay, now I want to know from this class, because you're already staying long here now. If you understand it, type 3. If you don't understand it, type 4. If you understand it, type 3 in the comment section. If you don't understand it, type 4 in the comment section. I understand it, I type 3. I don't understand it, I type 4. I understand it, I type 3. I don't understand it, I type 4. Okay. So okay, somebody understand. If you understand it, type 3. If you don't understand it, type 4. Don't worry, I'm here. That's why I'm here, to make sure that you get it. If you understand it, type 3. If you don't understand it, type 4. I'm waiting. I understand it, 3. I don't understand it, 4. I'm waiting. Okay, 3. Okay, I've seen, okay. No, come on. If you are, who is Teddy Alex? You say I understand it now. And okay, I understand it, 3. Yes, yes, yes. That's good, that's good, that's good. If you don't understand, okay, there is only one person that's typed 4 now. So because of that person, let's explain it again. Then we'll call it a day. We'll meet again tomorrow to build on this. Because the moment you get this, the moment you get what I'm talking about tonight, just go and price Ferrari. Just go to where they're selling Ferrari. Say, how much Ferrari? Give me some time. I'm coming to buy it. I'm telling you. All right. I'm going to explain it again. Just give me a moment. So it's only all right. So let's re-explain it again because of that one person that said he or she did not understand. So let's get back to the chat. Now, you realize that moves, market moves, you know, market moves like this. It moves impressive movement, retracement, impressive movement, retracement, or pullback, retracement or pullback. Now, this low here, it must not come lower than this. If it comes lower than this, it is no more an uptrend or maybe a false breakout. So price comes like this and goes back to the up. It must be breaking the previous resistance, but it must not break the previous support. To be in an uptrend, it must not break this. It must not come lower than this, but it must always break the resistance. So it comes like this. It comes again. It must not break this support, but it must always break the resistance. That's what they call it. It's forming series of higher highs and higher lows. Higher highs and higher lows. So the market is forming series of higher high. This is high. This is higher highs and higher lows. Okay. Then we say higher high, higher high, higher high. And the market is forming series of higher high and higher lows. Market is forming series of higher highs and higher lows. Higher lows, higher lows. Sorry. Okay. So when the market is forming series of higher high and higher low, you need to understand that the support must not be broken. Now it's forming it like that and it's just going up. Okay, it's going up again. When it's coming, it must not break the support, but it must always break the resistance. Okay, it has broken it again. It has formed another higher highs and another higher lows. So, but then all of a sudden you see something like this. Boom, it has broken this support. Then if you have been buying before, something will tell you, hey guy, calm down, stop buying. No, stop buying here because it has broken this support. Price has broken this support. So the moment it break that support, and then it will pull back a little bit. The moment you see something like this, you begin to count. You want to know if the sell has started. That is now, that last one that broke it will now be your P1. Is my P1, and then is, I've seen a P2. I've seen my T1. T1 is there. Then now you now have an option. You now have another option. If this thing goes and close above this one, it means that this one below here is a force, it is force. Maybe it was news that caused it, is a force. But if it comes and close below that one, okay, and then it's turning back again, it's turning back again, okay, then the moment this happen, this one, this place has become your P2, my P2. Then I need to have my T2. So if I have something like this, the moment this one pulls back again, the moment this one pulls back again, my T2 has formed. So the rules now says that the moment you see two successful peaks and trough lower than each other, a bearish trend has started. P1, T1, P2, T2. Then the rules now says that you will now be waiting for it here. That means the downtrend has started. That if the price comes here and close, by the time it's getting to this place, you're supposed to be courageous enough to take a sell from there. You take a sell from here, from this place, you put your stop loss at this place, then the price will start doing something like lower high and lower lows. Price will start doing something like, you see the price doing something like here, like this, then it comes again, it comes lower, it will keep breaking that, it will keep breaking that, and then you are just looking for opportunity to sell. Now, what I'm showing you today is to identify that the trend has changed in the opposite direction. I will now be teaching you how to enter here, because like I told them in class yesterday, my physical class, and I told them a professional trader now, how does a professional trader trade? Sorry, a professional day trader, how does they trade? He will enter the market from here. A professional trader will enter the market from from here, and it will close at this place. It will close here. The other day he will come, enter the market from here and close at this, at somewhere around there. Why? Because he like to enter at the beginning of an impressive movement and close before it end, before the end of it. So a professional day trader has a skill to enter market from here and come out here. He will enter market from, from, that's a day trader. It's different from a swing trader. And I think I've taught you all of that in class. I've taught you a scalper, I've taught you a day trader, I've taught you a swing trader, I've taught you an investor. Here now, you see, you will enter here and come out here. You will enter here another day and come out. That's how we trade, though. That's how we trade as a day trader. You will enter here and come out here. Day trader will enter here, and but a swing trader will just be following the swing until it change in direction. So that's why when I was teaching you moving average, cross moving average, I was teaching you how to be a swing trader. The line, the crossing line, they are for swing trading, because it is in swing trading that will actually give you the maximum profit from the market. So I want to believe that this should be clear enough like this. It should be clear enough. Is it clear now? Is it clear now? Um, is it clear now? The person that typed 4 that I didn't understand it the other time. The person has removed the 4. Okay. Okay, Martha, do you understand it now? If you understand it now, please type 3 in the comment section. If you still don't, just type 4 again. All right, beautiful. Now you understand it now. So that's how to know the beginning. And the beauty of trading is that you're able to catch trend right from the beginning, and then you can ride on it. The secret of making profit is when you know the beginning of a new trend, and you can ride that trend until you exhaust the trend, until you exhaust that trend. I'm telling you, that's how to make it from this market. You can ask that this thing is not a scam. It's not a scam, contrary to many people's thoughts that is a scam. So let's now say, okay, so let's look at it from here. Let's say this guy has been selling, he has been selling, he has been selling. All of a sudden, this resistance is broken. So for one reason or the other, he has been selling this market. All of a sudden, this resistance is broken. Okay? So when it break, he wants to count. If we have P1, then T1. T1 is always at the same level with the previous T, but it didn't close below it. So we can still accept it's is allowed. Okay, I think it's supposed to be P1. There's a P1 here, there's a T1 here, then we have the T2 here, then we have the P2 here. The rule says from here you should be able to buy. You should be able to buy the market from here. You buy the market from here, you switch lower time frame from here, then you ride on it. You will be shifting it to the last swing. You shift it, you shift it, you shift it, you shift it until you get to this place. You ride that wing from here to this place, and by that you will have had how many pips profit? Just about 208 pips. 208 pips. And then the moment it breaks back, but that breaking is going to be on the higher time frame. Now it's breaking back here now. P1, T1, P2, T2, but it did not complete it. That means the price is still on the high side. I'll tell you how I used to manage this side. I'll tell you one of these days I used to manage that and I still make profit from it. When that trend is about to change, I'll tell you how I used to manage it later the course of the trend. Now, this one has broken it now. The moment you see that it has broken this support now, very clearly broken, clearly broken. So this becomes my as I see that thing broken now, guess what I'm going to be happening? This becomes my P1, my pick one. Maybe we should even be writing it in full so that some people will understand. My pick one. Then I'll be having my T1. Okay, T trough. My trough one. My T1 will be my T1 will be here. Then I'll be having my peak two. My peak two is somewhere here. The next peak. It's just English. It's not anything technical. My peak two. Peak. Peak. Then my T2 is actually here. My T2 is here. It's in this next one. I'm telling you. My P2 is there. So the rule says at the completion of the T2, here now, I should be looking for opportunity to sell. If you get what I'm showing you tonight, you have made it for life. You have made it for life. I'm telling you. So I'll start looking for a sell. I'll start looking for a sell from here. I'll start looking for a sell from here. I'll start looking for a sell from here. So I'll be switching to a lower time frame. And I'll be looking for there are other skills to use to look for a sell. If it break here, I'll start selling. So if I sell from there now, see my entry, I'll be following it, 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 until maybe I follow it here or here. At least I'll be coming out from the market from here. I'll tell you. How many people is that? How many people is that? I've gotten about 110 pips. 110 pips. Is it clear to everybody now? Is it clear to everybody now? Okay. Is it clear to everybody now? If it's clear to you, just type 5 in the comment section. If it's clear to you, very clear to you, because I want to end this class now. If it's clear to you, type 5 in the comment section. Type 5 in the comment section. If it's clear to you, type 5 in the comment section. Type 5 in the comment section if it's clear to you. All right, it's all right. So I'll continue again tomorrow, and we see how far we can go. So make sure you practice this on any instrument, on daily synthetic indices, on currency pairs, on stock, on anything. It works perfectly well. I'll see you again tomorrow. Thank you, and God bless you.